This is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for the Monday afternoon show on January 25th. I am covering three markets as usual. In this segment, it'll be March soybeans, March wheat, and April live cattle. Excuse me. So let's begin with soybeans. Big sell-off last week. We have a sign of near to midterm weakness below 1354 to 1370 half. Now, 1370 half is this long-term descending two-thirds speed line. And having settled above it a couple of weeks ago, I was anticipating bullish continuation into spring trade. 1660 and a quarter being a 3 to 5 month target. I am off that now. In my book, a failed longer-term buy signal is a valid sign of weakness near to mid-term. And so I think that holding below 1354 even to 1370 half, this market's vertical nature can sort of reverse itself, and we could get sort of a downside, a downdraft, a washout weakness over the coming weeks down to 1137 half. And I'm going to say that is in reach by the end of March. Now, as I say that, I just want to also note that there is a respectable support level coming up, a one-third speed line projected off the 2019 low against the most recent high of 1436 half. And that comes in at 1231 and a quarter. And so we could quite easily bounce at 1231 and a quarter into later February. And from here, perhaps the market able to rally within several weeks into that 1354 even to 1370 half area. But given the vertical nature of this move, I think you should at least allow for 1137 half over the next 5 to 8 weeks. And certainly closing below 1231 and a quarter at the end of this week should yield 1137 half pretty quickly. 2 to 3 weeks, I think, at the very most. And this formation, this long-term channel top, former channel top, I should say, represents long-term support that can contain selling really, I think, into summer and through the balance of the year. And from here, you know, I even see the possibility of maybe a head and shoulders formation. That's possible. But if we bounce nicely out of here, which I think is the likelier outcome, the market can sort of grind its way back into this high territory in the 1430s within several months. And we could, once testing 1137 half, continue on into the $16 handle. You know, the timing of that is obviously impossible, but I'm just mentioning it. I guess what I'm underscoring is the significance of 1137 half. It can contain selling through the rest of the year. Once tested, the market can do as it pleases. But if we close below 1137 half, then this market probably gives everything away that it gained from the spring-summer lows. We could fall quite easily back into this old consolidated framework between roughly, 790 and 960. This wide area, I think the market would then be inclined to fall back into if we close any week below 1137 half. But way ahead of myself here, let me just finish up the soybean topic with a reminder or sort of underscoring the fact that holding below 1354 even to 70 half will allow 1137 half by the end of March on the way down. Give good respect to 1231 and a quarter, as it can contain selling into later February, and we could get a nice bounce off of that. Now, upside, if this market does close the week, Friday, back above 1370 half, it's basically neutralized this washout dynamic that I think is underfoot right now and likely to play out in the weeks ahead. That neutralization then allowing at least consolidation, and I think over the coming weeks, a likely outright bullish continuation. And I'll just say that closing the week back above 1370 half, I do think 1660 and a quarter is likely as a summer high, possibly a spring high, and this formation able to contain annual highs. Let's move on to wheat. I'm going to give you the big picture. This is March wheat, weekly continuation chart, volume rollover. It presently reflects the March contract. This is my big picture support I've been mentioning to oh, by the way, I'm going to jump in and just say, this is my commercial, okay? Go to my website, rtechadvisory.com. If you've never had a free trial, or if you haven't had a free trial in at least 6 months, I offer 2 weeks, no questions asked, no credit cards. Just go to the RTech Advisory website, fill out the free trial form, give me your name, email address, a phone number, and you'll start receiving my daily futures analysis for 2 solid weeks. You'll get everything, all 12 or so letters that I do. I cover lots. I cover milk, actually, futures. I cover soybean meal, so forth and so on. A lot of stuff that you don't really hear that I speak about on the radio program. And it'll include, a consultation. I'll call you up. I can talk to you about your trading, hedging needs. And at the end of 2 weeks, I'll also follow up with a phone call. So that's all I'm going to say about that right now. With regard to March wheat, I've been telling subscribers now for several months that 592 3/4 is our base of support, really through the rest of the year, and above which the market is, you can see this long-term saucer bottom that's at play right now, and that process remains firmly intact. We could actually get upside acceleration perhaps into later year, holding above 592 3/4, and I'm not discounting the possibility of 861.5 over the next, I'm going to say 8 to 12 months at this point in time. Okay, it could be accelerated, and I'll give you that in a moment. Under what scenario would we actually reach 861.5 in the months ahead? But for right now, basic, solid support 592 3/4. And then above which 861.5 in reach this year. Let's take a look at the near-term outlook for wheat. We've been topping out. This has been a level, this channel top that we've tested now a couple of weeks ago. This week at 702 1/4, I've been telling subscribers it can contain buying through February. And from here, we can quite easily fall back to the 590s long-term support. Once again, that 592 3/4 speed line I showed you here is preceded now by a respectable channel base at 597 1/4. So with regard to channel dynamics, holding below 702 1/4 does allow a test of the 590s over the next 3 to 5 weeks or so. And if we do test it over the next 3 to 5 weeks, if we do test it over the next 1 or 2 weeks, in any event, this rising channel bottom, 597 1/4, along with this rising speed line at 592 3/4, can absorb selling into summer trade, possibly through the balance of the year. And from here, we can continue higher. Now, higher would be accelerated if we were to close this week, for instance, above 702 1/4. Now, this channel top is rising gradually. It'll be higher as we continue into later February, and so it's good to make note of it. Closing above 702 1/4 should result in price acceleration. And then I would expect then this 861.5 long-term speed line within as little as 3 to 5 months or less. 861.5, if tested over the coming months, it's dropping a little bit every week, able to contain annual buying pressures. I'm going to say one more thing about wheat, that if over the coming weeks we actually close below 592 3/4, I can actually paint the picture right now as to what I would expect, and it would be this long-term channel bottom that is right around 475 even. So closing the week below 592 3/4, I have then a 3 to 5 month downside objective at 475 even, where I would expect the wheat market to actually bottom out through the rest of the year. Finally, April live cattle. We had a buy signal of sorts last week. Now, if you've heard me talk on the radio, once in a while I throw out the 1% violation margin requirement. And what does that mean? Well, it means that this market, while it did settle above this 121.80 formation last week, it did not push beyond it by a 1% margin, meaning it is prone to, what it means is it's not entirely reliable. I like the fact that it closed above it, but I do need to see a settlement this week 1% beyond 121.80, 123.02. If we can close Friday, the week itself, above 123.02 April contract, this market, the broader live cattle market, has a 3 to 5 month signal of bullish continuation into the mid to upper 130s. 135.82 to 138.15 then becomes kind of a spring, early summer objective, where I might add we can top out through the rest of the year, possibly well into next, because from here this market can rotate south over the longer term time horizon. So Closing Friday above 123.02, which is 1% beyond 121.80. Expect 3 to 5 months bullish continuation into the mid to upper 130s. I'm pointing out here little levels along the way, these old highs that can snag weekly buying pressures on the way up. Now downside, if we close the week Friday back below 121.80, that is a sign that this market still remains susceptible to falling back to long-term support. What is long-term support? At this point in time, it is a moving target, almost always a moving target with my analysis because I use speed lines and channel formations as my trend-defining instruments. But if we close back below 121.80, I wouldn't be surprised that over the next few months we fall back into the 108, even to 109.20 area where the market can bottom out through spring and into summer. We could then trade inside this zone for several months. But we're not there yet, and just want to give you the heads up. And last thing I'll say is, if over the coming months we close below 108 even, this market continues south in an aggressive way. But I'm not going to get into that right now, and that is really all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.